Now, oil prices, as we were just saying, soared on the renewed fighting. Brent crude jumped nearly 9%. It's now trading at more than $82 a barrel. West Texas Intermediate, WTI, is trading about $77 a barrel. Now, shipping data shows that traffic in the Strait of Hormuz has fallen to a nearly 2-month low. People in the industry say more ships are turning off their public tracking systems, making an exact count difficult. Mohit Kumar is the chief European economist at Jefferies, and he joins us now. Good to see you, and thanks for weighing in here as we've been really tracking some late-breaking news on the markets. I do want to first talk about what you say is giving due respect, in your words, to market volatility. I mean, if I look at the geopolitical risk, I'm not sure the market is actually pricing this in, despite the jump in energy prices we saw today.
So the energy prices are definitely impacting on two fronts. One, rates are higher, and we have seen front-end rates creeping up. Market is pricing in a bit more chances of a Fed hike. So that part is definitely going to start impacting the equity markets as well. And second, if you look at equity market performance on aggregate, it seems that the market is not moving much. But if you look at pockets within the equity market, there is a lot of movement within the pockets. So, for example, the chip sector is definitely under pressure. Some of the growth related names are getting under pressure because of oil prices going up. So, we are seeing a lot of movement within the sectors, even though on an aggregate level, S&P is not moving much.
You know, market moves are at this point very much tied up with the AI trade. Do you expect there will be some kind of a healthy reckoning on this? Because when we look at the long term here in 2027, I'm just wondering how the theories on AI stand up, given the fact that they say there will be winners and losers, and yet on the other hand, especially if you look at the S&P, people are saying that, look, corporate revenues will stand up here and these valuations are warranted.
This is exactly what you said we are looking at is, I think it's a healthy correction. So if
Huh.
we look at some of the AI names, they have gone up 100% or more. So if we get a pullback of 20%, I see it as a healthy correction. But to me, the most important part is positioning and expectations. So when AI names were doing so well, what we had was market was getting very crowded. And this is something at Jefferies we do quite religiously is to track positioning across investors. Market was too crowded, expectations were too high, some positioning cleanup was warranted. So that's why I call it healthy correction. Earnings are still strong, capex is still ongoing. For me, eventually it will be a buying opportunity.